Well, here in Australia, as we've already discussed tonight, the Reserve Bank has decided not to lower interest rates further for now. The question now, of course, is what will the bank do as the year unfolds? Well, in the second part of our week-long series, we asked our economic experts to look again into their crystal balls and tell us where they think interest rates will be at the end of 2012.
Well, we think the cash rate will be at 4% by the end of 2012. Now, the Reserve Bank's positioning itself at the moment for the downside risks to the economic outlook. They mainly reflect, of course, European woes. The domestic economy is in not a reasonable shape, so we think they need to be a little bit cautious about how far they go.
I think it'll be about 1% lower than it is now, so around 3.25%. And the key reason is we will see a domestic slowdown this year. I don't think it'll be precipitous, but unlike in 08-09 when we had fiscal policy and the currency helping to moderate the slowdown, this time everything's going to have to fall on the Reserve Bank, so they will have to cut rates further.
I actually think the cash rate's going to be unchanged for two reasons. One is I actually think the euro gloom we're seeing in the markets at the moment will not be reflected in the fundamentals of the Australian economy, which is tied to Asia. And also, I actually think the Reserve Bank will need something in reserve in case things are worse than some people expect.
We see the official cash rate around about 3.75%. Basically what we see is the Reserve Bank cutting rates till about the middle of the year and then putting them on hold for an extended period. And so by the end of the year, we'll be in this hold period where essentially rates are around 3.75%.
We think the cash rate will be around 4% at the end of the year, maybe a little bit lower. We think global growth has a little bit more slowdown to come, inflation may be a little bit lower, and we still think some of the parts of the economy are going to be pretty patchy in the near term. But over the course of the year, we expect to see some improvement in some of those beaten down areas of the economy, the consumer, the housing sectors, enough to see the RBA leaving the cash rate at around the 4% mark.
So there you have it. 4 of our 5 experts think rates will be cut this year, even though the RBA did nothing today. We'll see who's right in December.